You've probably heard of Coca-Cola, the fizzy drink in the iconic red can, a brand recognized in nearly every corner of the world. Its logo is instantly familiar, and its taste is a symbol of refreshment for millions. For over a century, it's been the undisputed king of soft drinks, shaping pop culture and dominating the beverage industry with its global reach and marketing power. But what happens when a giant like Coca-Cola decides to step into the world of coffee, a market with its own traditions, rituals, and loyal fans? This is the story of Coca-Cola's bold move into coffee and its journey with Costa Coffee, a beloved British brand with a rich heritage and a passionate following. Costa started as a small family business in London, founded by two brothers with a dream to bring great coffee to the city. Over the years, it grew from a single shop into the UK's biggest coffee chain, serving millions of cups every week and becoming a staple of British high streets. When Coca-Cola bought Costa, it was more than just a business deal. It was a clash of cultures, a global soda giant meeting a local coffee favourite, each with its own identity. We'll explore why Coca-Cola spent billions to buy Costa, hoping to brew up new opportunities in a fast-growing market. And why, just a few years later, they considered selling it, raising questions about strategy, timing, and the challenges of global expansion. The drama peaked in December 2025, when, after months of tense negotiations and speculation, Coca-Cola suddenly called off the sale, leaving the industry buzzing. Why did they change their minds at the last minute? What factors tipped the scales? And what does it mean for Costa's future, its employees, and its loyal customers who love their daily cup? This isn't just about numbers. It's about strategy, competition, and the future of a global coffee brand. Let's dive in and uncover the twists and turns of this remarkable business story. Back in 2018, Coca-Cola faced a major challenge. Consumers were turning away from sugary drinks in record numbers. Health trends were shifting, and people were becoming more conscious about what they drank. Soda sales, once the backbone of Coca-Cola's empire, were steadily declining, and the company knew it couldn't rely on its classic products forever. The company needed to diversify its portfolio, and coffee was booming worldwide. Cafes were popping up on every corner, and coffee culture was spreading fast, especially among younger generations. The global coffee market was growing rapidly, offering a huge opportunity for companies willing to adapt. But Coca-Cola lacked a global coffee brand, the necessary expertise, and a network of coffee shops to compete. Entering the coffee business from scratch would be a massive undertaking, requiring years of investment and learning. Building a coffee empire from the ground up would take decades, so instead, they decided to buy their way in and leapfrog the competition. Their target? Costa Coffee, then owned by Whitbread, a huge success in the UK and rapidly expanding abroad. Costa was already a household name, with a loyal customer base and ambitious growth plans. Costa had everything Coca-Cola needed: thousands of shops, state-of-the-art roasteries, efficient supply chains, and the popular Costa Express self-service machines found in airports, offices, and gas stations. In August 2018, Coca-Cola made its move and bought Costa for $5.1 billion, a bold and clear sign of their coffee ambitions. The deal made headlines around the world. The plan was simple but ambitious. Use Coca-Cola's massive global reach and distribution power to turn Costa into an international coffee powerhouse, rivaling the biggest names in the industry. Ready-to-drink Costa cans, more express machines in new locations, and aggressive global expansion were all on the table. Coca-Cola wanted to bring Costa to millions of new customers. Coca-Cola wanted Costa to be their answer to the world's growing love for coffee and to secure their place in the future of beverages. It was a bold, strategic bet on the future of beverages and a move that could redefine the company's identity for decades to come. The question was, would this massive investment pay off, or would it be a costly misstep in Coca-Cola's long history? Let's see what happened next as Coca-Cola's coffee gamble unfolds. After acquiring Costa, Coca-Cola launched new products and expanded Costa Express worldwide. But by 2025, whispers grew that Coca-Cola was rethinking its coffee strategy. Running a global coffee chain was different from selling soft drinks. Coca-Cola quietly began exploring a sale, hiring bankers and starting an auction. Why sell so soon? Sometimes, companies grow a business just to sell it for a profit. The stage was set for a high-stakes bidding war over one of the world's top coffee brands. Who would step up to buy Costa? News of Costa's potential sale drew in the world's biggest private equity firms. Firms like Apollo, KKR, TDR Capital, and Bain Capital all showed interest. These investment giants saw Costa as a cash-generating, globally recognized brand. After rounds of analysis and bidding, the field narrowed to TDR Capital and Bain Capital, both with experience in retail and consumer brands. Their expertise made them strong contenders to take Costa to the next level. The auction was nearing its climax. Would one of these firms become Costa's new owner? The answer was about to surprise everyone. With final bids in, it seemed a deal was imminent. But in December 2025, Coca-Cola shocked the market. The sale was off. Why? The offers simply weren't high enough. Coca-Cola had paid $5.1 billion for Costa and invested heavily since. The bids didn't meet their expectations for profit. Private equity firms wanted a bargain. Coca-Cola wanted a premium. The gap was too wide, so Coca-Cola chose to keep Costa. This wasn't a failure, just a strategic pause. Coca-Cola signaled they value Costa highly and aren't desperate to sell. For now, Costa remains a key part of their global strategy. The coffee story continues. Why is Costa so valuable to Coca-Cola? The answer goes far beyond just selling coffee. It's about strategic positioning in a market that's growing more competitive every year, and about tapping into a global obsession with coffee culture. It's all about the global coffee wars. The world's biggest beverage companies are fighting for dominance, and coffee is the new battleground. Starbucks dominates coffee shops worldwide, setting the standard for cafe culture and customer experience in cities across the globe. Meanwhile, Nestlé rules at-home coffee with brands like Nescafé and Nespresso, making it the go-to choice for millions who brew at home or in the office. Costa gives Coca-Cola a direct rival to Starbucks in cafes, offering a unique blend of quality, convenience, and brand loyalty. Especially in the UK and China, Costa has built a loyal following, becoming a household name and a daily ritual for millions. But Costa is more than just coffee shops. It's beans, pods, and ready-to-drink products, expanding the brand into homes, offices, and on-the-go lifestyles. With Costa, Coca-Cola can compete with Nestlé in supermarkets, offering a full range of products that appeal to every kind of coffee lover. And with Starbucks on the high street, Costa stands toe-to-toe, giving consumers a real choice in their daily coffee fix. The Costa brand now appears everywhere: cafes, supermarkets, petrol stations, airports, and even vending machines, making it nearly impossible to miss. Owning Costa makes Coca-Cola a true full-service beverage company, able to serve customers at every moment of their day, from morning pick-me-up to afternoon break. Selling it would mean losing a crucial foothold in one of the world's most lucrative and fastest-growing markets, risking long-term growth and influence. That's why the decision to keep Costa matters so much to Coca-Cola's future strategy and global ambitions. It's not just about coffee, it's about global competition, market share, and staying ahead in a rapidly changing world. Coffee wars are fierce, with every brand fighting for a bigger slice of the market and customer loyalty. And Costa is Coca-Cola's weapon of choice, a brand with global reach and untapped potential. The battle is far from over. The next chapter in the coffee wars is just beginning. Let's look at what makes Costa unique and why it's such a powerful asset in Coca-Cola's global playbook. Costa's roots are in the UK, where it's the dominant coffee chain. But the vision has always been global. China is a key market, with Costa and Starbucks racing to win over a new generation of coffee drinkers. Costa's international presence now spans Europe, the Middle East, and Asia. The Costa Express self-serve machines, powered by Coca-Cola's distribution, bring the brand to thousands of new locations. Costa isn't just a cafe, it's a flexible platform. Shops, drive-thrus, express machines, and ready-to-drink products. This multi-channel approach is exactly what Coca-Cola wanted, a brand that can reach consumers everywhere. Costa's strength is its adaptability and reach. That's why it's such a powerful asset for Coca-Cola. The story doesn't end here. With the sale cancelled, what's next for Costa? Coca-Cola is doubling down, investing in Costa's growth and innovation. Expect more stores, more express machines, and new products in supermarkets. But the auction showed that a sale could return in the future, if the price is right. For now, Coca-Cola is focused on making Costa even more valuable. Private equity firms are watching, ready to bid again if the opportunity arises. The dance between buyer and seller isn't over, it's just on pause. Costa remains central to Coca-Cola's strategy to be a total beverage company. The next chapter is about growth, not goodbye. The story continues. The Coca-Cola and Costa Coffee saga is a masterclass in corporate strategy. Coca-Cola's $5 billion coffee gamble gave it a seat at the global coffee table. The cancelled sale wasn't a failure, but a sign of Costa's growing value. With Coca-Cola's backing, Costa will keep expanding and innovating. The coffee wars rage on, and Costa is right in the middle. For now, the for sale sign is down, but the future is always brewing. Costa's journey with Coca-Cola is far from over. Stay tuned. The next twist could be just around the corner.